Hi, everyone, and welcome to another episode of Proof of DeSci, where we explore how decentralized science is transforming the future of research, funding, and innovation. And today's episode is called Funding the Future, Why Juniper Believes in DeSci. And we're joined by Michael Luciani, co-founder at Juniper, a venture fund laser-focused on climate, biotech, and synbio. Michael and his team recently became ValleyDAO's newest strategic partner, and today we are going to unpack why. Also with us are Albert Annis and Morgan Richards from ValleyDAO, both incredibly instrumental in shaping our strategy and driving ValleyDAO's vision forward. Whether you're building in DeSci, guys, curious about venture funding, or just passionate about science for the planet, this episode is for you, and let's get into it. Welcome, guys. And Michael, how are you today? All good?
Doing great.
Amazing. So, Michael, let's start maybe with your background. How did you get into climate biotech investing, and what led you to co-found Juniper?
Yeah, happy to. And I'll give a little bit of my non-climate biotech background too. So I grew up in Michigan, went to school out in Massachusetts, and then I moved to Washington, D.C., where I worked in policy. And eventually I started to kind of work for a variety of different political campaigns. And then I started a company, and the company made software for campaigns and for advocacy groups and for nonprofits. We were super lucky. We found some great angel investors. We had Reid Hoffman and Chris Sacca and Eric Schmidt on our cap table. We eventually scaled the company up and ended up selling it to Bloomberg Philanthropies. And after that sale, I realized that early stage entrepreneurship was and is a way better way to make a positive impact in the world than policy. And so I knew I wanted to work with early stage entrepreneurs that were focused on impact. And I co-founded the Climate Capital Syndicate, which today is one of the most prolific early stage investors in climate tech. And so I myself have led, over 100 different SPVs, which are like an investment vehicle to invest in startups through climate capital. And I learned as I was doing that the big places where solutions are desperately needed are in kind of how we make physical goods, material synthesis across the board, kind of building materials, and then also food and ag as far as climate solutions go. And those are the places that yet don't have a good solution in the way that we do seem to have for energy generation, some good solutions in like solar and wind and nuclear, or for transportation, we are starting to have good solutions in electric vehicles. So there's this big, majority of emissions actually come from how we make physical things, whether they're the clothes you wear or the buildings you live in or the food you eat. That's more than half of emissions, and those are still kind of unsolved. And I saw that the most interesting scalable solutions at the early stage were coming out of synthetic biology. It was all about engineered biology. These systems are all reliant in large part on organic molecules, whether it's like, great, this was, a fruit grown in a field, or whether it's this piece of plastic in my laptop is made from, a petrochemical derivative. That is still, at its heart, oil or petrochemicals are just crushed up and compressed organic molecules from, ancient plants and dinosaurs. So anywho, all of this is a place where biology is excellent at making these inputs. And as the cost curves have gone down to read, write, and edit read, write, and edit DNA, and as the kind of recently ability of AI to increase velocity of learning has gone up, it just seems like this is very obviously the space where these large unsolved climate problems will be solved. So I was very lucky to meet Jenny Kahn, who unfortunately couldn't be with us today, but she's my co-founder and co-GP at Juniper. Jenny rocks. She was a lead protein engineer in Frances Arnold's lab at Caltech. Frances, went on to be the first synthetic biologist to win the Nobel Prize. She actually talked about Jenny's work at her acceptance speech. And so Jenny is really our big competitive advantage in some ways as an investor, because there's a lot of early stage investors out there like me who are interested in deep tech, but not themselves technical. And most, synthetic biology companies in particular, but by and large, most deep tech companies in the beginning stages only have technical traction. They're like, hey, I can kind of show this thing works. And so having Jenny on our team to really evaluate that technical traction helps us to make great investments and make sure we're partnering with entrepreneurs on technologies that can really change the world.
Amazing. Thank you for this introduction. Thank you for explaining to us as well what Juniper actually does and what's your core mission. Albert and Morgan as well. For listeners who might be new here, can you just tell us a little bit more about what is ValleyDAO? What's the core mission that we are building towards?
Hopefully. And once again, Michael, thank you so much for joining us and taking time out of your schedule. And we've been really looking forward to this conversation, both me, Morgan, and Tom.
So it's my pleasure.
Also, so what is ValleyDAO, right? We are a climate biotech-focused DeSci project, a DeSci ecosystem, with the primary objective of making capital formation, so particularly through crowdfunding for climate biotech, a much faster way. So basically enabling a much faster funding process for academic researchers in climate biotech that have something that could be of potentially commercial. And so the way we do that is we leverage IP NFTs and IP tokens. And what this does is it enables us to represent intellectual property on chain and enable people to essentially own a piece of that IP or have exposure to that IP by funding it. So it creates like a two-way market dynamic where funders can get some stake or ownership, and then researchers ultimately getting the funding. The fastest way we funded a project has been 26 minutes of $200,000. So it really shows the potential of this funding model by, at the intersection of crypto and research funding. A couple of other things that we do. So, different from any other organization, we have the Grow token. So the Grow token, you can see it as serving multiple purposes. Primarily, it's a governance token, so people can vote on which research projects we bring to the platform and crowdfund. But it also serves as a proxy exposure to all of the research projects that ValleyDAO funds and brings to market. So it gets people that exposure to essentially climate biotech. And final thing, and which is like a sort of like a new branch in ValleyDAO, is like, you have the capital formation side, but then you have the knowledge formation side. So knowledge formation is something, the way I think about it is like, the knowledge needed to bring a technology to market. So you have the capital, then you also have the knowledge formation, and that's what we're doing with the Flow platform, which Morgan is really spearheading and working on. I'll let him say a couple of words about that as well.
Thanks, Albert. I'll try and keep it short, but I think Michael touched on something that was really important, which is how these early projects and early companies are typically only have technical traction. And so in essence, what I would summarize Flow to be is a platform that can help evaluate the technical traction and identify any gaps that need to be addressed, and then also help to start developing the business traction. And by that, we mean like deciding on a business model, doing competitive analysis, obviously understanding your customers, their needs, doing surveys, research, all of that kind of thing. And these are like the steps that founders or technical founders typically don't know where to start or haven't taken yet. And so this is really important. And then finally is the fundraising aspect. So everything from VC to grant funding opportunities, we also help them match their projects to the most relevant funding opportunities for them. And hopefully with all of these three things combined, we can help actually accelerate innovation in climate biotech.
Fantastic, Morgan, Albert, thank you so much for that. And Michael, Juniper has a clear focus on climate biotech and symbio, obviously. What's your investment thesis in this space, and how do you define success? I think that's incredibly interesting.
Yeah, absolutely. I wish I could show you guys some of the visuals that I've been working on in our investor decks that we use to raise money for our fund. But big picture, like when folks hear the word biotech, they generally think pharmaceuticals, right? They think mRNA vaccines or just drugs in general. But really, when you kind of zoom in on what is biotech, what is the bioeconomy, like where do people spend money on engineered biological things? Pharmaceuticals are generally, depending on the given year, less than half of that total bioeconomy market. The other half is kind of food and ag, generally between like 30 and 40%. And then the kind of remainder is industrials and material synthesis. I think I overstated how big food and ag is, but anywho, directionally speaking, like you're splitting that pie up three ways, and none of those pieces far outweighs the other. So all that's to say is like there's a ton of money invested in pharmaceuticals. There's very few dollars relative to that invested in food and ag or like industrials, bioindustrials, making things. And yet the market, the total addressable market's equally big, which means that that's a good place to invest, right? Where you can have large outcomes as an investor, but you don't have to necessarily compete with lots of other companies or other investors. To put a couple numbers on it from a different direction, over 60% of all of the physical inputs to the global economy engineered biology. So 60% of all the physical inputs to the global economy is worth about $50 trillion. Today, 6% of these physical inputs are made by engineered biology, so about $3 trillion. And we kind of see synthetic biology as being at an inflection point where it's getting more and more cost effective to make more and more of these things with biology compared to the incumbent. And so as that line of like cost efficacy moves, you're eating up more and more market share. We try to invest right at that like bleeding edge of that line. So like what is newly able to be made with biology cost effectively today that couldn't have been yesterday. And I'm sure that this won't be surprising to many listeners, but from the perspective of biology at an inflection point, there's really three things that we think about as investors. One is like the declining costs and time needed to do the basic fundamental work, whether it's reading, writing, editing, DNA, or other components. The easiest example is DNA sequencing. 20 years ago in our lifetime was a multi-billion-dollar like nation state level moonshot, and now it is a consumer product, right? It's like you can get your entire genome read today for a couple $100, and that is a declining cost curve that is declining more quickly than Moore's law. So the Moore's law being like the cost of compute is going down exponentially is basically a slightly inaccurate way to summarize that. But if you haven't heard of it, it's really the thing that has driven the computer revolution because we've been more and more cheaply been able to have more and more compute. So this is the same dynamic happening in biology, even faster than it happened in computers. And then the second component that we get excited about is AI. If you go to like the AlphaFold website, they've got all these great testimonials of scientists saying, hey, this project we would have spent 2 years doing, we can do in 2 months with AlphaFold. So that's kind of the second component where as those models continue to improve and they're improving very quickly, you can just do a great deal of work much, much more efficiently. And that means that there's a lot more possibility for founders to find product market fit or founders to figure out how to scale up what they're doing. And then the third is kind of like giving those AI systems hands and freeing up some of the drudge work from humans. And that's companies like Trilo Bio, which we're an investor in, or Opentrons that are really kind of automating some of the more manual components of lab work. So, to kind of boil it all way down, we think at Juniper that it's today possible to start a really impactful company, one that might reform single-digit or even double-digit percentages of greenhouse gases, that might decarbonize toxic supply chains, that might be, multiple billions or tens of billions or hundreds of billions dollar, valuation, and to do so, in a garage at very low dollar amounts, where previously, if you wanted to start a company with those ambitions in engineered biology, you really needed tens of millions of dollars. And so because the bar to entry is so much lower today, lots more people are taking shots on goal. And that's where you want to be as an investor, right? And that's really magical, because I think the potential here, as I hope I've stated relatively clearly, is huge in terms of potential societal impact.
Thank you, Michael. I was thinking while you were, I think that was an amazing walkthrough of your thesis and what are the enabling factors of climate biotech. I'm curious to ask you, from my perspective, climate biotech really became a thing, particularly the term climate biotech, back in 2019, 2020. Before that, it was industrial biotech. It was an industry of its own. It wasn't really the term was mainly used in Europe, and in my view. In 2019, I started seeing the aspect of climate biotech really becoming more of a thing. And I think, really particularly a thing in the US, and the key drivers there was really the government. There was a lot of grants, a lot of funding going into that. But now a lot of that is being either shut down or reframed in a sense. So I'm just wondering, despite all of these enabling factors, what is the future of climate biotech, particularly in the US? And if you have also an opinion, also in the rest of the world, maybe Europe and China.
Yeah, I think that it's a great question. I mean, even for Juniper, you will see that we have kind of started really taking the word climate out of a lot of our public-facing materials. And that's because we are in the United States, and because of the political environment in the United States, people are skittish about climate investing. Investors, people who invest in funds, are worried about their capital being more at risk because unfavorable policy might be in the wings, or might be enacted at any time. So what we've seen in the United States is that people are not changing what they're doing at all, but they're emphasizing different aspects of the benefit. So, the ways in which the language has evolved is, instead of talking first and foremost about the sustainability impact, we might talk about the impact in efficacy, in lower costs, in supply chain resilience, in kind of onshoring next-gen or critical manufacturing capabilities. And what is great is that the use case for these technologies is really an economic one, where in the best companies we see, they're able to say, hey, I can make this thing 10 times, 100 times more cheaply than the incumbent process. Maybe the incumbent process is a multi-step chemical process that's very toxic, right? So not only is it cheaper, but it's also there's less pollutants, there's less toxicity. But the economics is what drives the argument. And what's interesting from our perspective as investors is we actually are still seeing involvement from even the US government in these companies, but it's a different logic behind the involvement. So previously we saw a lot of grants from the Department of Energy, and now we're seeing a lot of advanced contract commitments and grants from the Department of Defense. And the Department of Defense is giving these types of contracts and grants to the same types of companies, right? They're companies that are making sustainable aviation fuel or making, carbon negative chemicals. But their logic is that this is part of a critical supply chain that they want to onshore and have redundancy. Their logic doesn't care about the climate impact, but the climate impact is unchanged. So I think that, for founders, it might end up being a good thing that there's a renewed emphasis on the economics. I think it's, just unavoidable that And the reality is that there's a lot of negative disruption too. Like if you're a founder that has a grant from the DOE that got canceled, that really sucks. And that's no fault of yours. And like, I wish that was not a thing that was happening. But, I kind of first and foremost think that the declining cost curves that are really accelerating growth in this space are a secular trend and will continue regardless of government involvement. And then secondly, I think government involvement is still large. It's just focused differently. And truly, as far as climate goes, climate biotech is very fortunate that these dual purpose arguments and dual purpose rationale for supporting companies in this space are logical and work here. I think there are other parts of climate tech that don't have the ability to make that argument, who are in a much tougher spot.
That's great. Thanks for the answer. There's so many more things I want to touch on here, but I'll let Tom go with the next one.
No worries. Thank you so much. Albert, whenever you've got any questions, just ask them freely, completely fine. But yeah, Michael, you mentioned a couple minutes ago about also the AI, how it brings this kind of efficiency factor to science, to biotech as well. And I actually wanted to ask you, what are some key trends that you're seeing in climate biotech right now? Maybe apart from the AI, or maybe if you want to add something to that thought that you had before. But yeah, the trends, especially in terms of what's actually getting funded right now, if there's anything that you've spotted recently.
Yeah, absolutely. I think that it will. I think first and foremost, it's still quite a difficult time for food tech. So recently it's been there, I think there's been a lot of money that's gone into food tech, especially over the past few years in lab grown meat that hasn't kind of realized the types of results that investors wanted. Lab grown meat, is a technology that I think is still not at the right point in the cost curve for venture investment, but a lot of venture investment went there anyways. And so that has made investors more skittish about investing in food tech as a whole. And that's an overreaction, and I wish it wasn't so, but that's a tough spot. However, on the agriculture segment, there's less skepticism. So we've seen a lot of interest in different microbial-based fertilizers and microbial-based kind of interventions for plants and plant health. And then we have also seen even some more interesting, more maybe moonshot-oriented work around improving the efficacy of photosynthesis in plants and kind of different interventions around plants in terms of climate resilience or better tasting fruit or more efficient and effective growing, all sorts of interesting stuff, even like deeper root systems to sequester more carbon. And then I think the other component that's been significantly more active in the space in the last year and a half than other parts of DeSci has actually been biomining. So there's a whole bunch of different ways in which people are trying to do biomining, but really, you're trying to just have a mechanism to separate out one type of metal, one element from another. And so there are microbes and there are enzymes that can do this in a variety of different ways. And this is another place where the current process for this type of separation is not only really inefficient, but extremely pollutive. There's both a strategic imperative where the United States and the West in general, everyone that's not China, would love to process rare earth elements in their home country. Because right now China processes 90+% of all rare earth elements. And so that's a supply chain vulnerability. But processing rare earth elements in the United States or Europe in the way that China does is impossible because it's so extraordinarily toxic. It's illegal in like 20 different ways. So biomining is also not only a more cost-effective solution, but a solution that is clean enough where you wouldn't be in violation of any environmental regulations doing that work onshore in Western countries. So there's a lot of interest in that area. trying to think what else. I mean, I think we've recently done a deep dive on kind of biological based compute, which is really an interesting new area. We haven't made any investments there. I don't know if I would call it hot, but I mention it just because it's kind of weird and interesting. Yeah, start with that.
I wanted to come in there and just ask. You mentioned a lot of focus areas here, and it's like we share a lot of the same insights, I would say. Agricultural, like biotech, it's not as hot, but it's like, a low amount of biologic, high amount of value sort of thing. And but I want to ask you, like, what is your take on consumer biotech that is not, like a medical device or a diagnostics tool, but just, like fluorescent plants, these cosmetic brands, and other, new things that are slowly coming on the market. Like, would you say that is also climate biotech, or is it its own thing, or like, are there any, interesting intersections here that could be part of that framing?
That's a great question. And I think that it really depends for consumer biotech on the particularity of the product. So there's a lot of companies that are working on kind of making particularly high value compounds with biotech. They often start out selling those compounds to cosmetic companies, and makes perfect sense, right? Cosmetic companies will pay a large amount of money for a small amount of volume, depending on what the compound is. And there, I think, is a very clear argument for that being climate biotech in many cases, because often founders are either replacing a compound that's gathered in a way that's very extractive and damaging to often like a fragile ecosystem, or they're replacing a compound that's made from an oil or petrochemical derivative of some kind. So those are both positive climate cases. For something like light bio, or like I don't know if I think that's the name, for like buying a glow in the dark plant for your house. I am super in favor of those companies, because I think that we are on the cusp of kind of this coming age of biotech and non-pharmaceutical biotech in particular. And I love opportunities to kind of evangelize those products. And I think consumers buying something like that is a great way for that percolation of knowledge in our society to happen. I don't think that there's a clear argument that is having like a direct climate impact. So I think that you'd have to make a judgment call on like whether you felt like you could, at least for us, if we were going to make an investment in a company like that, I think we'd have to say, great, like we would have to just be honest with ourselves that we're okay with it not having a direct climate impact, and saying like, we think the fact that this is evangelizing this space and kind of accelerating the space as a whole is worthwhile. And we haven't actually ever considered that yet. So I'm not sure if we'd pull the trigger on an investment like that or not. But a couple other anecdotes, like we're investors in Colossal, the company bringing back the woolly mammoth, and that was part of the rationale for making the Colossal investment at their seed stage. Was, sure, I think there's some degree of climate argument that being able to bring back extinct species is a good thing to do, a good capability to have as humanity if we are continuing to make an ever more harmful climate for species and drive them into extinction. But we also kind of thought about, if they were successful, then we would hope that it's a positive kind of knock-on effect for biotech, where it might be inspiring for more talent and capital to go into that sector. And so I think that actually has been happening, which we're happy to see. But that's the kind of maybe the one analogy where it is an alternative business model, and it kind of plausibly someday will be consumer facing, and we did make that investment and we feel pretty good about it.
Yeah, it's really like sometimes like the climate impact is quite untangible and like unquantifiable, because like if you say colossal, for example, like Ben Lamb, the CEO, was like on Joe Rogan podcast like a month ago, and that is as mainstream as you almost can be, like with 200 million listeners, and then they were like on the New York Times and everything, and I think that got a lot of people thinking. And I've had this similar thesis myself, is that if you can get a biotech product in the hands of a consumer, whether that's a plant or whether that's a cream, or it'll give them like an anchoring point from from their perspective, like in their everyday lives, to biotech that is medical. Because if you ask the average person like what is biotech, they maybe say medical, but that's as far as it gets. They don't have like a similar understanding of what a computer, like they probably better know what a computer is rather than in comparison to like a biotech product, and that's because they interact with it on an everyday basis. And so I think these consumer biotech products can really make biotechnology real for a lot of people, and bring it even more into the mainstream. But yeah, I thought I'd ask you because we've faced like a similar scenario. We're currently facing that right now. It's like we have a really interesting consumer biotech project that we are slowly like preparing, but at the same time, it's like the climate impact of that is a little bit like out there. But it's an amazing product, and it's something that the community really wants to see, and everybody has been telling us like you should do something with plants. But yeah, just want to share that.
Yeah, I've got one other thing that is, I think, worth saying is I think a lot of companies we've seen in our portfolio have potentially a large ability to create a climate impact. And when they start, their first go-to-market is maybe more in the pharmaceutical side of the market. And sometimes there's an argument that there's a good climate impact to that work also. But sometimes there's not, right? And it's just like, great, this company is small and they need to sell a small amount of product because that's all they can make for as much money as possible. And the pharmaceutical companies will pay the most. And as they get bigger, they can expand what they're doing into, these kind of food and ag use cases or material synthesis use cases that have a bigger climate impact. We actually do have one company that they're called Evolve. And they were an example of this, where they have, the ability to kind of make large edits to plant genomics and have those edits stick. It's like a gene drive technology. And so there's a ton of really interesting applications for kind of adaptation and resilience in terms of growing crops in a changing climate. But they kind of thought critically about how do we, generate the highest amount of margin to fund that critical work. And they realized they should engineer Arabidopsis to grow GLP-1, like a bioavailable Ozempic in the lettuce, and crush it up and sell it as a supplement. And so I'll put I just put the link as like a reply to this.
It's a GLP-1 supplement, not it'll it'll have the same effects as GLP-1. Like this is like prescription.
Yeah.
Okay, this is interesting. Okay, cool. Very cool. Yeah, I've seen this shift to GLP-1s. Like it's definitely a wave, and I think the demand for GLP-1s is just going to skyrocket. And I think they're peptides, right? So right now they are chemically produced, maybe, and there's probably some potential for like biomanufacturing them as well.
Yeah, and we have a company in our portfolio called Arellas, and they make non-canonical amino acids with directed evolution. It's another spin out from the Arnold lab where Jenny worked. And actually, non-canonical amino acids are a large part of how something like GLP-1s are manufactured. And so already, like a company like Arellas is using biomanufacturing to help remove some of the most toxic chemical processes to the current manufacturing paradigm. And so that's been really cool to see.
Hey, I know we were also supposed to talk a little bit about DeSci, Michael, and I wanted to ask you, Yeah, I mean,
Absolutely.
like DeSci, it's still like a field being defined, changed. But I'm curious to hear, your perspective on it. Like, what does it mean to you? You haven't really been, knees deep as we have, but from an observational point of view of having talked with some founders, looked at certain projects, what are your perspectives on it?
Yeah, I think that as an investor, the way that I think about DeSci has really been changed by the last couple months of the Trump administration here in America, where it seems like DeSci, of course, represents an alternative pathway for great science and research to be funded and commercialized. And seeing the ways in which the conventional pathways of academic grants are currently being disrupted, it felt to me like, of course, it makes sense to take a bet on over the next 10 years or 20 years, alternative pathways becoming more and more commonly traveled, especially as the traditional ones kind of are seen as less reliable than maybe they were in the past. And I do think that communities of common cause are extremely powerful, and the internet allowing all of us to be on this call together, no matter where you are in the world, and for the community of folks in climate biotech and in the ValleyDAO community to collaborate in the same manners without working necessarily side by side physically is always going to be powerful, right? So like coupling that with a funding mechanism, I think will inevitably have good results, because you only need one person, right, who's really passionate, who's working with ValleyDAO, and who ends up having a successful outcome to really prove the model. I think it's inevitable that will happen over the next couple of years.
Let's definitely hope for that. Morgan, unless you have any questions, I'm keen to ask Michael this follow-up. And it's something that we have reflected on quite a lot and really try to understand it. And that is, how does the funding gap, the valley of death, how does it look like in climate biotech? Because it's always referenced and points to the valley of death in pharma. But what has been, your reflections on that? Like, how does it look like for climate biotech and industrial biotech, or synbio, or whatever you want to name it?
Yeah. They're all pointing in the same direction. I think it can look a little bit different depending on what field you're in, right? Like if you're building a type of seed or a type of plant and you want to sell seeds and you're needing to work with, kind of Monsanto and Bayer, your pathway to some degree looks a little bit more pharma-like, where you have a longer period of time where you're working with kind of centralized entities and getting evaluated and tested. And there's a kind of if your product works as advertised, like there's a big upside. And if not, like you pretty much are going to zero. But I think that's kind of an outlier. I think the beautiful thing about climate biotech is that by and large, you are operating in spaces where the regulatory burden is not as high correctly as it is in human health, so that you can actually go out and sell your product to customers. But Juniper invests at pre-seed and seed. And we haven't been around that long. We've been investing out of this, our first fund, for 2.5 years. And Jenny and I were investing for a couple years before that, but I think 4 years total. And so we have relatively few companies that have gone on and raised like their Series A. The majority of our portfolio, still 80+%, are pre-seed and seed stage. And almost half, 45% of them, are revenue generating. So I think that the first kind of big hurdle is getting revenue, and is getting customers to demonstrate they want this thing that you have, and that really gets companies from pre-seed and seed to Series A and Series B. And that's like the big first hurdle, is like, can you prove that people are willing to pay for what you're building, and kind of prove the unit economics around it. And I think the next big hurdle, and this is, I think, the more common cause of death, it's more difficult, is building, a first of a kind demonstration plant or a first of a kind plant, and then kind of N of a kind plants. So kind of this industrial scale up is hard. And it's hard because you kind of need to find different sources of capital, right? You shouldn't be building a CapEx intensive demonstration plant or, scale up facility entirely with venture capital dollars. You should be going out and finding, debt financing or non-dilutive funding of some kind to pay for as much of it as you can. And that's difficult. Those lenders there are fewer of them, and they're not as experienced in this space. And so the ecosystem is changing quickly, and there is more support for this type of work than there has been in the past. But I think that's still your most likely cause of death. And there's a lot of creative ways that we've seen companies navigate that. But I do think that over the next 5 to 10 years, we will see a lot more non-dilutive debt-based lending in that scale-up space that doesn't yet exist. So if you're hitting that point before the lenders catch up, it's going to be hard. And I think that's where we see the most companies struggle.
Okay, thank you for that. And
Thank you, Mike.
Yep. Thank you, Michael, for the answer to Albert's question. I've got a question to all of you guys here. Maybe we can even start with Morgan, maybe, because he hasn't really had the time to be in a spotlight just yet. But still sticking to the DeSci space. What do you guys think in terms of the traditional funding models in biotech, and how does DeSci compare to it? What does it do better? Where is it still evolving?
Interesting question. So I think the first thing I would say kind of draws on other things that were talked about today, which is that a lot of when we talk about biotech, a lot of it is just, even by the language, is geared towards pharma and biomedicines. And so I think a lot of the thinking around funding in terms of how it's structured, how much you should be raising, what the valuation of different companies are at certain points is kind of directly coming from that world. And so for these companies which are developing things in different ways, they have different needs, different challenges to address, and ultimately a different scale of market and like kind of value of the product itself. There needs to be a more kind of from the ground up solution for funding. And I think the opportunity that we have with DeSci in funding climate biotech specifically is that there, as far as I'm aware, there isn't really an established standard. People are still figuring it out, and we're all kind of figuring it out together by making mistakes, by having some small successes and wins, and we're kind of like really developing that model collaboratively as an ecosystem. And so I think even just this very kind of drop in the ocean partnership with Juniper VC and DeSci, and some of the other VCs that are getting into DeSci, like the onboarding of the traditional funding ecosystem into DeSci, or at least into experimental models, groups of people that are willing to challenge the status quo and try something else. I think those are the types of collisions that are going to birth something really interesting and exciting. And I think for climate biotech, there's a lot that could be done, because we're not just talking about one type of product. In the case of pharma, right? Like it's drugs or it's treatments. But for climate biotech, like we could be talking about food, materials, consumer products. Like there's so many different things that could be received. And that means there's so many different ways in which it can be valued by the people that would buy it, right? So I think that gives also a lot more flexibility in the funding models, because there is like direct benefit that could be had from people that participate in the funding in the case of DeSci, right? Like I could receive a consumer product. I could receive one of these glow in the dark plants, or as Albert alluded to, one of the smelling plants that changes the scent of a room based on my personal scent preferences. Or I could receive a bioreactor that is going to produce something interesting or useful to me at home. And so that makes me personally a lot more excited about funding this research, knowing that I and other people can directly benefit from these things. And they're not just going to be, like a drug it kind of has to go through that whole bureaucratic pipeline, right? Whereas a device, a portable bioreactor or a device or a plant that you can have at home, these things are a little bit more free, right? Free to move around. They're easier to actually distribute, to share. There's less regulations, of course, and so I think that's just like a lower barrier to experimenting more as well. But yeah, I know I waffled a lot there, so I hope there was something coherent in
I think the beauty of climate biotech is that you don't have to wait 10 years to sell something. Like if you don't even have to figure out scaling technically to have your final product. And that's why I think it makes it really interesting from a crypto perspective, is because the expected return on investment time horizon for a lot of investors in crypto is not 10 years. It's like 5 minutes if one really exaggerates. But jokes aside, I think a lot of crypto investors might become that are invested in DeSci might become disillusioned after 10 years. Whereas if we can prove that we can bring something to market in only 4 years, but with climate biotech, I think it paints a really interesting picture of the perception that can create for DeSci as a whole. But yeah, not having the FDA and not having to go through that's a big advantage.
100%. And Michael, is there anything you'd like to add to that?
Sure. Yeah, I think that part of what I'm excited about with the big picture trends I talked about in the beginning of the space, where it's becoming more accessible for more people to tinker and build in biotech, means that I think a smaller amount of money can get companies off the ground, can allow them to kind of figure out a prototype or test out what they're doing. And you might have people who are doing this as a hobby and find that they can get a small amount of investment via DeSci and get a company off the ground in a way that's just significantly faster than academia and significantly faster than like pharmaceuticals. So I do think that I agree with that completely. I also would say that the kind of time to large valuations, kind of hitting $1 billion valuation in deep tech companies has been going down, right? The average used to be 14 years, then it was 12, 10, 8. I think it was 6 or 7 most recently. So the timelines are compressing as each of these steps are being made more efficient. And yeah, I think that we will see much more of a blended model where you might have a company that has support from a DeSci community as well as investment from a VC, maybe as well as a grant, and like I think that makes sense, and it'll all just be in service of speed of execution, which is a good thing.
Absolutely, I couldn't agree more. And Michael, can you tell us, because we still have a few minutes left, and I'm going to add some people from the audience to ask some questions, but I do have a couple left. Michael, what made you decide to invest in ValleyDAO? What stood out to you?
Yeah, I was saying I think that for ValleyDAO and Juniper, there's just such a clear common purpose where we see this potential in climate biotech.
Albert, what does this partnership with Jupiter mean for ValleyDAO's mission and our roadmap?
I would say it's an extension of the ValleyDAO team. Michael and Jennifer, they've been followers of ValleyDAO and aware of ValleyDAO for the last, since its inception. Like Jennifer was in the very first ValleyDAO call, actually, and so it goes really, really way back. And ever since then, we've been aligned on the same mission. And having Juniper as this direct partner right now, also through the investment, enables us to extend basically our knowledge base. I think a lot of the research projects that we end up crowdfunding will have Juniper's eyes pass at those opportunities and just looking at them, supporting us and making better decisions. And yeah, just I think also more of a later stage partner. Some of the research projects that have been funded through ValleyDAO, once they start maturing, once they start forming valuable, protectable IP, and when as a business case could be established, Juniper could be like a very early investor in those as well, and help us shape those companies too. So a lot of interesting overlap, and I think this is just like scratching the surface of it. I think there's a lot we can do in terms of knowledge formation, best practices, what makes climate biotech companies work and what makes them fail. And so, yeah, just joining forces on many fronts, I would say.
Fantastic, thank you. And Michael, you're back, I think.
I think so.
Yeah, amazing. Yeah, if you'd like to answer that question, what made you decide to invest in ValleyDAO and what stood out to you?
I think that the team and the community is super strong. And I'm glad that Albert got to go first because I couldn't have said it any better. I think that there's a community of common cause that's very powerful. And I absolutely think that a lot of the projects that are funded through ValleyDAO might be great investments for Juniper. And we're excited to, be able to help those projects grow into great companies. And, to be able to support the community in any way that we can, really. But us kind of climate biotech focused people, I think right now are seeing a non-consensus vision of the future to some degree. And so, the more that we can work together to build these communities, the sooner we will get to the, I think, inevitable version of the future that we all see. And so I think that's very powerful. And we wanted to take the opportunity to do that with ValleyDAO.
Awesome. That's wonderful. Albert, is there?
No, I was just going to say, let's reach the climate biotech singularity together. However that can look like. But I think it is community driven, fundamentally, I think. So let's keep working on that and then building out the ecosystem.
Absolutely. Morgan, what should we just towards the end of the show? What should we watch out for in the coming weeks at ValleyDAO? And there's a hint, nucleate.
Coming up in just about a month's time, we've got a hackathon which ValleyDAO is sponsoring in London, UK. And this is going to be in partnership with Nucleate. It's a plant biotech focused hackathon. So we spoke about plants already today a little bit. Lots of really awesome stuff to be done there. But yeah, this hackathon will last over one weekend. So I believe, where's the date exactly? I think it's starts on the 27th and runs over that weekend of June. And yeah, there's going to be two tracks. One is the computational track. So that's going to be much more focused on some of the kind of partners of the hackathon are supplying data sets and some like proprietary data. So there's going to be a computational focused track where you're going to get to use some of that data and do some interesting things with it. And on the other side, there's the blue sky track, which is one we're also very excited about, which is just really rewarding people for pushing the boundaries and doing things that are really unique. This particular plant biotech hackathon has a bit of a focus towards non-model organisms. So a lot of the work that we do with plants and even in agriculture, right, the crops. The crops that we use are of a very limited selection of the available crops out there or the available plants out there. They were selected for hundreds, and some of them thousands of years ago, and they may not be optimal to supply the planet with the food and energy that it needs, especially as we grow and scale civilization. So the hackathon is really focusing on those non-model plants and what can be done outside of the scope of traditional agriculture with climate-focused biotech. So if this sounds like something you're interested in, then absolutely either come and speak to us directly and we can point you in the right direction, or you can find all of the information online. I think the URL is www.planthack hackathon2025.com, and you can find all of the details about the hackathon there. And you could, if you enter, be in with a chance of winning 1,000 or 2,000 British pounds. So yeah, we're also going to be giving access to Flow, which has not been publicly released yet. So if you want to get a chance to use some of the funky new AI tools that we've been building, both on the technology de-risking and business development side, then you will be able to do so in this hackathon too.
Fantastic. Thank you very much, Morgan, for this overview of Nucleate's hackathon. More info also available on our Twitter page and our Discord channel, so go guys and check that out. Michael, Albert, Morgan, do you have any final thoughts?
Just super excited for everything that is to come. I think we've already kicked off 2025 at ValleyDAO with a bang, and hard to believe we're almost halfway through it. But yeah, I think the year is set to close very well and continue growing. So
Couldn't say it better. Thank you for joining us, Michael. Thanks for hosting, Tom, and everyone in the
Thanks so much
the
for
audience.
having me.
So that's
See you guys.
That's a wrap for today's episode of Proof of DeSci. A huge thank you to Michael Luciani from Juniper for joining us and sharing his insights on the future of climate biotech and why DeSci matters now more than ever. And as always, big thanks to Albert and Morgan from ValleyDAO for leading the charge and helping us build a more open, collaborative future for science. If you're as excited as we are about the direction this space is heading, make sure to follow ValleyDAO and our speakers and Michael and Juniper as well. And if you're holding growth tokens, you're already part of this journey. So this is just the beginning. DeSci isn't a trend. It's infrastructure for the next wave of scientific breakthroughs. Thanks for tuning in, guys, and we'll see you at the next episode of Proof of DeSci. Stay curious and keep proving that DeSci works. Thank you so much.